Thanks so much for joining us on this show and giving us those details. Joining us is another special guest who's been waiting patiently, and I need to welcome him on the Outlook 2009 as well, Gautam. Thanks so much for joining us. Let me at the onset wish you a very, very happy and better new year, if I may say so, compared to what everyone has gone through in 2008. Let me ask you the specifics. How tough are things going to get from here on? Because nobody is saying it's going to get... Yeah. How tough are things going to get, Gautam? Go ahead, tell me how bad or good is 2009 looking for you?
Well, I think let me start off by wishing you at NDTV and everybody else, all your viewers, a very happy new year. I think primarily in our sector, we are seeing that yes, it is getting tough as far as exports, etc. go. But we're seeing a strong convergence to brands, and we've really seen, we haven't seen as bad a dip as many other sectors have seen. So I think if you really focus on your brands and you focus on quality products, my personal view is that you should be all right for 2009.
Gautam, this is Shelley joining in as well in the discussion. You just said that, things have been a little tough on the export front, which has forced many to believe that Raymond is going to concentrate on the domestic market for 2009 in a bigger way. Can you elaborate on those plans and what makes domestic market more attractive?
Well, Raymond has fundamentally been in the domestic market. It's only over the last 3 or 4 years that Raymond has significantly expanded its ready-made business in the international market. Having said that, I've always said that India and China will find their place in the export market, and the fact that countries like Japan prefer India as a supplier is always going to go in our advantage. If you see globally, textile companies in Europe and America are slowly shutting down because labor cost has become very, very expensive. So a little bit of the slowdown in the economy is compensated by the fact that a lot of industry is actually shutting down in the western parts of the world, and that business is moving to the domestic market. As far as the domestic market goes, Raymond has been a clear leader, whether it's in textile or apparel. And if you see our retail network that we have got, I think moving forward, this is really a big strength that Raymond is going to capitalize on, expand its distribution network, and ultimately use this to its competitive advantage.
But Gautam, just to go back a few years, when you were setting up those lines for the export markets, how do you deal with that capacity? Does it translate into excess capacity? Because they were all export oriented from what I remember. I've seen some of them, they are world class, and maybe India was not ready for those products. So what happens to that investment? Did they give in returns before kind of becoming in a part of excess capacity?
I didn't say they become excess capacity. I just think the world has become a little tougher. But if you see all our garmenting facilities are all running at 100% utilization. So I was talking overall as an industry, exports is going to get tougher. But if you are a quality manufacturer that has built long-term relationships with people who are looking for sources of supply in India, you will still be better off.
So when you say tougher, you mean in terms of pricing, you mean in terms of the sustainability of orders? How would you translate that for your investor?
Well, I think price does come under pressure, but then the dollar depreciation does compensate to it to a bit. Obviously, China is going through its own problems, and it's obviously offering lots of goods and services at much, much cheaper prices because of what's happening in the U.S. economy. So as a general overall economic scenario, it is going to get tougher, but we believe we will keep our head way above the water.
In terms of specifics, Gautam, there was an issue about the denim business. Where does it finally stand? Because related to that, a lot of investor community is interested in what's happening to a part of the business which includes a lot of extra land as well. So everybody wants to know on those two fronts, denim as well as excess land for you guys. What's the final take on it?
Sure, let me start off by denim. I think, as you are aware, the denim industry has gone through a very, very tough time over the last couple of years. And we had done a joint venture, and there were some facilities that were in Belgium and in America which were not yielding results, which were loss-making. As a result, both the facilities have subsequently been shut down, and all the labor has been retrenched. We're now focusing on low-cost areas like Romania and India, and to optimize the capacities there. So we have actually, in effect, restructured the denim business to try and make it on a better wicket than what it was 6 months ago.
Sure. And having said that, do you think that in any way, while you restructure your general plan towards the domestic market, I'm just trying to come back to the issue that we were talking about at the start, are there any concerns still left for you to take care of in terms of real estate costs, in terms of pressures on raw material? Because cotton prices, as it happens, in the domestic market have also gone up. Would that hamper any of the plans in the general direction of expansion?
Actually, I think denim per se is going to be in a tough time because there is overcapacity over the world. So that, and being an export-driven business, with the general economic slowdown over the world and the overcapacity being a commodity, it is still going to be in a, I'm not saying it's out of the woods, it's still going to be a little bit of tough time. What I did say is that from the situation that we were in 12 months ago, we have restructured that business to try and make it a little more profitable than the situation that it was in.
Just one final question. Retail, where your brand is now becoming more and more sort of, on the last mile front. The fact that rentals have dropped, does that mean you'll actually cash in on the bad times to expand faster?
I think it's a great opportunity because rentals have gone way out of proportion, and I think the rentals having come down will give stronger companies like ours an opportunity to further enhance our retail presence. We have over 550 stores now in 175 cities. So having really invested in this backbone for our industry, I think this is really a good opportunity for us to go out and enhance our retail presence.
Gautam, Singhania, all the best. Thanks so much for joining us on this very special show. Thanks so much and have a great 2009. We'll take a quick break on the show. When we come back, much more markets are losing a bit of steam.